Rich people can speculate. People with little money cannot speculate. People with no money at all must speculate. In my experience, there are three ways to get rich quickly. First, a marriage that brings wealth. Second, a lucky business idea. And third, speculation. In my 80 years of stock trading, I have learned at least one thing. Speculation is an art, not a science. The stock price will never equal the actual value of the company. Otherwise, there would be no stock exchange. Being a finance minister, I can't. Being a banker, I don't want to being a stock market speculator. That's me. I am a speculator, always the same. The relationship between fundamentals and stock prices is like that between a master and a dog. When the master walks the dog in the park, the dog is lively and active. Sometimes it runs very far ahead, sometimes it stops or runs around, and it may not follow the slow pace and direction of the master. But no matter how the dog runs, it will still be around the master and will eventually follow the direction of the master. Patience is perhaps the most important thing in the stock market. I have developed a unique mathematical formula for the stock market. 2 times 2 equals 5 minus 1. For the indecisive, the market is either too high or too low, and the decision is either too late or too early. There is no one who buys wheat when the price falls, and there is no wheat when the price rises. My stock trading motto is, people who value small profits will not have great value. To be a successful speculator, you must have 4 elements: money, ideas, patience, and luck. You in the world press a button in any corner, and you can feel it 5,000 kilometers away. This is the stock market. When the index is rising, even the worst speculators can make some money. When the index is falling, even those who pick good stocks cannot make money. Therefore, the most important thing in investment is the general trend, followed by stock selection. Only investors with at least 20 years of investment experience can. You don't need to worry too much about the overall development trend. 90% of the short-term fluctuations in the stock market are caused by psychological fluctuations. 95% of the work of professional investors is wasting time. They read charts and business reports but forget to think. But for investors, thinking is the most important thing. I often go to the stock exchange because there are no other places like here where you can see so many fools. It's not that I am interested in fools, but to make a completely different move from them. The key to understanding where the stock market cycle is currently is to understand whether there are more fools than stocks or more stocks than fools. Stocks are never too high to start buying and never too low to start selling. My motto is that I am not excited by what is known to everyone on the stock exchange. No school can teach a speculator because the tool of a speculator is experience. Speculators are intelligent and smart exchange speculators. A successful speculator makes 51 profits out of 100 trades and loses 49 times. He makes a living from this difference. As long as human beings exist, there will be speculation and speculators. This has been seen not only in the past, but also in the future. Only a few people can speculate successfully. The key is to be different and believe in yourself. I know everyone else is a fool. Any software can at most only as smart as its programmer. Market situation equals capital plus psychology. Never borrow money to invest in stocks. Put 100 highly intelligent people in a room together, and the results show that impulsive emotions will overcome rational thinking. Money is to the stock market what oxygen is to breathing, and gasoline is to the engine. The stocks of the most famous listed companies are most prone to excessive speculation. When the price starts to rise, the smaller the trading volume of this stock, the more optimistic the situation is. People can make money on exchanges, even a lot, and become rich. But they can also lose money a lot and go bankrupt. However, people cannot regard exchanges as places to work and make money. This is an eternal law. Every crash and collapse in the stock market is preceded by a surge, and every surge ends with a crash. Retracements often stop at gaps. As long as you have imagination, old things, even antiques, have a chance to make a comeback. The patient does not die from the disease, but from the medicine given to him. A breakout after a period of intense price consolidation is usually a trading opportunity worth taking risks on. Don't trust other people's opinions. That's your bet, not theirs. Do your own analysis. Ignore other sources of information. Don't try to even out. Trading is not a game of chasing after lags. Each position must stand on its advantage. Take your losses calmly and engage in the next trade with absolute discipline. At best, a trader is just a clerk who knows how to use a computer to complete transactions without having to use his brain. But as an investor, you must be a person who thinks. Whether an investor is successful or not can only be judged by his heirs. Psychology determines 90% of the market trend. The factors that affect the fluctuation of stock prices, especially short-term trends, are not mainly affected by economic development, but by investors' reactions to news and psychological factors. Good news does not necessarily lead to a rise in stock prices. The public's reaction to news is the main factor affecting stock prices. We must be disciplined, calm, cynical at times, and ignore the hysteria of the masses. This is a prerequisite for success. Real stock trading knowledge is what remains when you forget all the details. You don't need to know everything, but you need to understand everything. Point out the correct internal relationship at the critical moment and take corresponding actions. It all depends on supply and demand. My entire stock trading theory is based on this. There are two types of investors: stubborn investors and speculators, and hesitant players. The winner is the stubborn one. To me, the state of technology is only about one question: who owns the stock? According to my definition, whether a person is rich or not does not depend on how much property he has, but on whether his capital is intact and whether he has any debts. In short, speculators have ideas. Whether they are right or wrong, they are still ideas. This is the basic difference between speculators and stock traders. The most uninteresting thing is the information related to the index development trend. The index comes first, then the information. Speculators must discover growth companies earlier than the general public. Only in this way can they have the opportunity to enter the market at a reasonable price. Once in a casino or a stock market, even the wisest people will leave their wisdom in the cloakroom. The money earned from speculation is painful money. First there is pain, then there is money. Enter and exit before the market turns. Do the opposite. Endure the market's final decline. Stay away from the market's final glory and focus on market trends. In the securities market, rise and fall are inseparable partners. If you can't tell the end of the fall, you can't see the beginning of the rise. Similarly, if you can't tell the end of the rise, you can't predict the beginning of the fall. Anyone who wants to use scientific methods to predict stock market trends or future trends is either a charlatan, a fool, or both. Money belongs to those who pursue it crazily. He must be obsessed with money, like a snake hypnotized by a magician, but he must keep a certain distance from money. In a word, he must love money crazily, but he must be calm about it. Whenever I succeed in speculation, I am happy first. Not because I made money, but because I had a different view from others and was proven to be correct. Speculation is like a dangerous voyage between fortune and bankruptcy. It requires a ship suitable for long-distance travel and a smart helmsman. The ship refers to capital, patience, and strong nerves. The smart helmsman must be an experienced and independent thinker. I am no one's master nor anyone's servant. This is my achievement.